Fair value gaps are honestly so important to know in the market. So today we're going to cover the reasoning behind fair value gaps, what makes it a fair value gap, why to enter on fair value gaps, and the best times to actually trade them. And I'm going to give you a little treat because in this video we're also going to cover inversion fair value gaps. So let's get right into it. First thing to break down, a fair value gap. So what is it? A fair value gap is when you have a series of 3 candles, 1, 2, 3. It can be either bullish or bearish candles, doesn't matter. But when you see a little gap in the market, as you can see right here, then this would be a fair value gap. But if you see the 3 series of candles close like this, there is no gap in the market. So there is no fair value gap here. But again, if we have something like this, a little gap in the market, then you would mark it out between the wicks. So that is a fair value gap. Reason if your value gap is formed is when there is a strong momentum in either direction of the market. So in this case, it's a bearish market right here. And we see right here, the candle push was so strong that it actually fully took out, like it just flew down like 100 miles an hour, making a gap in the market. And oftentimes these gaps they leave market orders behind, which means that when they end up coming back down, they always want to retrace back into the zone, fill all the demand orders that was missed, and then continue their trend downwards. So that's a fair value gap. Now let's jump inversion fair value gap. It's the same concept as a fair value gap, just instead of it actually retracing back into the zone and pushing down, it actually makes a run right through and makes a full body close. I don't know why this is doing that. A full body close, just like that. So when you see a full body close, then this would be considered a inversion fair value gap. Because as again, a fair value gap comes into the zone, taps in, rejects back down. Inversion fair value gap makes the gap in the market, and instead of rebalancing the inefficiencies and retracing back down, it goes a strong body close through and continues the trend upwards. So let's jump into the market and let's show some live examples. So right here, we're in the market. We're at 10:30 in the morning during the AM session. What do we see over here? We have a little gap in the market between these series of 3 candles. So let's mark it out. Let's see, maybe this is going to be an inversion fair value gap, or maybe this is going to be a fair value gap. Well, let's see. We retrace right back through, and we actually end up breaking right through. So automatically, this is a fair value gap, and let's see what happens now. There we go. We retrace all the way back down. So we are we're in the downtrend. We're pushing, but a very strong move right here. See the strong move down? Well, it left people back. So many people want to push the market back into the zone to get their orders that they initially missed. And once they got filled, then we continued our trend down. And yes, I know you are going to say that there is a little breakthrough. So why is this not an inversion? Well, you can see right on the second candle in this zone of the fair value gap, we have the rejection right away, which still confirms it as a fair value gap. So let's show a little inversion fair value gap right now, which we actually have right here. So right here, we have the inversion fair value gap. So what do we see over here? We have a little momentum upwards, and we have a strong candle making a gap in the market. So now, what do we see? We come back into the zone. This over here actually acted as a fair value gap, yes. But what do we do again? We broke right through, came back in to retrace, and we continued our trend downwards. So yes, this is a bit of a messy inversion fair value gap, but that's just how they are sometimes. But another one over here, we can see it's a much cleaner one. We have another inversion fair value gap because we had a strong move down, and instead of using it and retracing down to continue our downtrend, we actually broke right through it, a very strong break, and we continue our trend upwards. So I hope that was clear. I hope you understood the difference between a fair value gap and an inversion fair value gap. And actually, just before I let you go, there are macro times. Macro times are honestly the best time to enter fair value gaps and inversion gaps. So during New York session, between 9:50 to 10:10, that's a macro. Then 10:50 to 11:10 is another macro. And then during the PM session, 1:10 to 1:40 is another macro. And well, you shouldn't even be trading this time either way. So those times when you see macros hit during those time periods and you see an inversion for value gap or if for value gap get respected, then it is 100% or 98% that macro is actually going to follow through to help the fair value gap or inversion fair value gap play through. So I hope you understood this video. I hope it made sense. I know it's a little quick paced. I don't want to make the video too long. And yeah, so I hope you have an amazing day.